Coba, mate. Coba, Alex.
You just got wrecked.
Oh! We need some milk!
What's going on, guys? It's K-Dub here with another episode of Crypto Zombie. So today is Friday. That's right, it's the weekend. We made it. Congratulations. Anybody else feel like it was an extremely long week? It felt like a super long week over here. But having a look, Bitcoin is in fact down on a Friday, nevertheless. 2.31%. We're sitting at around $8,451. Now, yesterday, we were discussing the possibility of another dump before Bitcoin actually started to put in a rally again. Now, the question is, was this the dump that we were looking for? Essentially just this push down to $8,360. Now you can see we have wicked up a little bit, but we haven't been able to actually go above any of these lows right here. So the question is, is Bitcoin looking to actually go down a little bit further? Well, probably by the time this video comes out, you'll have a better idea. But essentially, that's what I want to talk about today. I do want to obviously talk about the price short-term, mid-term, and also one thing that a lot of people have been talking about lately is whether or not the halving is actually priced in. In fact, some people are saying, yes, it is already priced in. That was the massive run-up that we had starting on April 1st. But I want to actually give a shout out to one YouTuber in particular who put a really interesting analysis out, and I do want to give him credit, and we are going to have a look at that video, on top of the fact that Tom Lee is still calling for a $25,000 Bitcoin by 2022, and if that sounds good to you, well, you know what to do. Also, if you are not subscribed to the Crypto Zombie channel, we do this every single day, and as you guys know, every Monday is the Ledger Nano S giveaway. By the way, if you guys are new to the channel and you want to hop to like any different part of the video, I always put timestamps below, so whether you care about, price, TA, fundamentals, news, conspiracies, whatever it is, we do it all here on the channel, and that will be below in the description. So let's give this a quick refresh and check out basically what's going on right here. Bitcoin dominance actually up to 66.1%. It was actually sitting around 65.9. Interesting. So having a look right here, we do have some Block V is up 6,616% with $308,000 worth of volume. So let's all rush in and buy some of that. Not. Okay, Verge is up. I bet you that has to do with the whole Pornhub PayPal thing. Decred, Horizon, Centrality, Zilliqa, Zella, FTX token, Nexo, Engine, IOST, and VeChain, and, then you kind of go into the very mild gains. Basically, but, we still are not having a lot of volume. Bitcoin sitting around 311 million, so very low once again. It is Friday, though. We are going into the weekend. You can see very, very bearish right here. 51%. The shorts are obviously taking over in just the past 4 hours. We did have that dump. Fear has gone back to 38. It was about 41 yesterday. Currently, we are sitting well below the 200 daily and the 200 exponential. You can see right here, Elixium Crypto pretty much points that out as being extremely bearish, saying that he's looking for a dump down to about $7,300. So is that possible? Well, currently, if we have a look at this, sort of downwards descending wedge we've been in, well, we actually were supported right here by the trend. We did wick out, great opportunity to scoop up a buy. If you had a buy order set down there, I actually had one set myself, but then I got rid of it.
Why?
I should have just left it. But that being said, anyway, so essentially you can see we are sitting here at the bottom at around 8.4, whatever it is right now, about 8.473. Okay, so we are still in this wedge. We have fallen below this support. Now, this support would be the resistance to get above. So basically, if we go to essentially November, 17th, and we were able to break out of this, well, then you would want to have to get above the 8,650 to break above this resistance as well. So now we're starting to actually put in more resistance as we get lower, but also, we are meeting some support as well. So we do have to take that with a grain of salt. Now, obviously, having a look at what Jack was talking about here, he's basically showing a magnet, essentially just pulling this wedge all the way down to the bottom until the halving. Now, do I actually believe that we're going to go that far? We're going to go all the way down to, what's he got this at, a $5,200 Bitcoin? I'm not going to say it's not possible, but I am going to say that currently just having a look at the monthly, essentially as long as we stay above the $8,234 level, we are looking pretty well. And obviously looking at the apex going to the end of this year, we could be waiting quite some time for that breakout. I actually said that about a week ago ago, we were talking about maybe just putting in some consolidation until the end of the year before actually having that massive blast off, right? Now, the thing that you do want to note is regardless of, having this nice little bounce today after the dump, we still have this descending, we have this resistance right here, okay? And this resistance has basically knocked us down 1, 2, 3, 4, 5, 6. I mean, you count it. Essentially, we cannot get above this line. And this first bit of support right here that we were looking at essentially has been breached. This resistance that we had right back here, which once we broke above it, obviously that's when we had our parabolic move. Well, we are sitting below that. So the next level is around the $8,000 level. Now, do I think Bitcoin's going to fall down to $8,000 today? Well, you could see Crypto Michael. He does say, preferably I'd want to see us tick above the $8,800 level to confirm a, essentially short-term bull trend. Well, we're still dumping. So this is the second day now we've had another dump. So now he's saying, if not, this slow bleed could accelerate to the $8,200 level as the next possible, level of support, right? Now, I do want to point out one little bit of bullish, just to kind of keep us, a little bit bullish here. We are actually sitting above the previous resistance. Doesn't matter where you take it from, whether it's the wicks or the solid candles. You can see we are sitting above both of those lines. So that is relatively, you have to say it's bullish. If you flip the resistance to support, that is a good thing moving forward for Bitcoin. And yes, I do still believe that we're going to have a similar sort of move like we did with this dump, where we had this dump sideways. We tried to break the resistance. We fell even lower. And then finally we had another pop. Same thing happened right here. In fact, I could show you, look, here's the line. We descended down right here. And then essentially, if we do the same thing right here, triangle, dump, try to break it right here at around that $9,000 level. We got rejected. Same way we did around $8,591 level. And eventually, we're looking for that line as well. So, could we go down to, we already touched the 8.3 level. Could we go down to some of these previous 8.2, maybe even down to the 8,000? Yes, that is absolutely possible. And, even though we are expecting a massive blast off, there is still that possibility for sideways accumulation. So essentially that is what I'm looking for right now. You can see currently we are wicking back up over here on Bybit. Now, obviously we have to get back above, now we have a lot of resistance. These previous supports, we got to get above the 8.5, then we got to get above the 8.5.8, you know what I'm saying? And then up here we have this 8.7. So now we're actually having a lot of potential resistance. So keep your eyes on this and see if Bitcoin can at least get below this previous wick of around 8.497, or let's just round it to 8.5K. So short-term Bitcoin getting above 8.5K. Is it bullish? Short-term bullish, but currently we're really just putting in lower highs, right? And that's not really good. Currently, we have put in a higher low compared to the bear trap, but yeah, that is conditional. Now, talking about some predictions, and then I want to show you a really cool video from another YouTuber, which I actually enjoyed watching. But first, we do have to talk about Tom Lee. Now, he is talking about the $25,000 Bitcoin forecast by 2022. He is known to be quite a bit of a permabull. A lot of people know that. He's very bullish on Bitcoin all the time, but he basically explained it by saying that we're looking at the network effect, right? He says cryptos are network value assets, meaning that more people hold the asset, the greater the value it becomes. It's a fact. It's a log function. So he says essentially if you double the users holding it, you get a quadruple of value. So if you wanted to go to $25,000 Bitcoin by prices today, essentially you would need a little less than a 4x rise, which means you would need to double the amount of people holding Bitcoin. So currently, there's roughly about 500,000 people who own or use Bitcoin. Rough estimate, we are basing this on, wallets, which are not necessarily the greatest indicator. However, that being said, you would need to essentially hit 1 million users, so 1 million wallets, 1 million people preferably using crypto in order to see the $25,000 valuation. He even compares it to things like the FANG stocks, right? 70% of their return is explained by the growth of the global internet in that period of time. In other words, a log function of the internet's growth. And that's how cryptocurrencies are going to work. And one other thing before we get to the video today, he says in terms of other factors, Lee says that he was very bullish on Bitcoin in the long term, saying that he thinks it's still in the early stages for digital assets, and over time, they will become highly institutional and established asset classes. Once we hit that, it's another hockey stick. And if you don't know what he means by hockey stick, it's just a reference to basically, a just straight parabolic boom. And he says, basically, this is going to happen. It's just a matter of when. Now, here's what I want to talk about. So, We talk about the halving a lot on this channel, right? A lot of different people suggest that maybe the halving is already priced in, right? It's only something that has to do with the miners. It doesn't affect the retail or the institutions, right? Well, this is a chart you might be familiar with. This has been floating around since before I even got into crypto. Honestly, I don't even remember who made this. I want to say his name is like Moon something. I could just be making that up, but it has gotten a little bit outdated. But I do want to give a shout out over here to Benjamin Cohen. Now, he has a relatively smaller YouTube channel, but he did put out this pretty great video about, and essentially it's just called Bitcoin price prediction based on logarithmic regression. And I want to play this for you. And in this video, you'll see why he actually thinks, and if you thought Tom Lee's prediction was crazy, he talks about a potential $140,000 Bitcoin by 2022, and he shows you exactly why in this video he thinks it's possible. So I do want to give a shout out to Benjamin Cohen. I think he goes by Into the Cryptoverse. I've seen his handle before, so definitely check him out if you haven't. But we're gonna watch this video. Also, stick around after this. I have a lot more to go into, and also friendly reminder: there are timestamps below if you want to skip to any parts of the video. But check this out and let me know what you think.
But there's a lot of interesting things to take from this graph. And we're going to just, we're going to jump right in and try to make sense of where Bitcoin might be headed in the next few years. And the way we're going to do that is just look at some of the trends that have already popped up in this market. So the first thing I have here, the purple on the top is the peak price during that cycle. And, some of you will note that Bitcoin got a bit higher than this, and it's right. That's correct. But what I do is I just mainly look at the candles. I don't look at like wicks that go up at all. But so if you just follow along in terms of these are the Bitcoin prices at the peak in the bull run, and then these are the bottoms in the bear market. So as many of you guys know, Bitcoin bottomed at around 3,100 or so, not 3,225, but that was just a wick. It wasn't like the part of the candle. So let's look to see how these, what the trends are showing us. So back in 2011, the price peaked at $31.9, and then it crashed down to $229. But during the next bull market, it went up 3,508% to $11.51. Now this 3,508 is actually measured from peak to peak. So even if you bought at this peak and you sold at this peak, you were still up over 3,500%, which is incredible. If you bought in the bear market at 229 and sold during this bear market, you were up 7,600%. It's amazing, because basically what that says is that if you bought in the bear market here and sold in the bear market here, you would have actually done a lot better than if you had bought in the peak here and sold at the next peak. Now imagine if you had bought in the bear market here and then sold at the peak. That would have been truly incredible. But anyways, you can see that this is a 3,500% increase from peak to peak, and then from this point down here to this point, it's 7,600% increase. Now, you can also note that from here to here, we went from 1151 up to 19,499, which was a 1,594% increase from peak to peak, which is still incredible to think that you're going up almost 1,600% even buying at the peak over here. Now you would have had to wait like 4 years to see that 1,594% return, but still that's an incredible return. And if you bought in the bear market over here, you would have bought at 177 at the bottom, and then you could have sold up here for 32.25 at the bottom, approximate, at a 2,656% increase. Now, where does this leave us? So how can we use this to try to determine where we're going? So one of the things you can note is that these peaks on this logarithmic regression are getting lower on, basically, each one is getting lower down on these lines. So you can see this first one here goes all the way up to this top line, and then the next peak, it drops down about three lines here, which is pretty significant, but it's still a huge increase. And then if you go from this peak to this peak, we're dropping down about 2 lines. Now, you can also measure, instead of just saying lines, because these lines are somewhat arbitrary, right? Because they're fit, they were optimized in the package that I was using. But the numerical value is just this. I mean, you can see that this was the percent increase from here to here, and then the percent increase from here to here was about half as much, so it wasn't nearly as high. So if we actually look at these ratios here, so the ratio between this and this is 0.454, so 1494 divided by 3508. If we continue that same ratio, so if we basically have again in terms of the percent increase from peak to peak, then that means if you had bought here and you sell at the peak of the next bull cycle, and if we have a 724% increase, which would be continuing this trend, then that would put the next peak potentially at 141,173. Now, another thing that's interesting is that I've drawn it on the blue line mainly because I think there's a good chance that that's where we're headed. So, you know, this one dropped down 3 lines, this one dropped down 2, and it's basically just a way for you to visualize, you know, these changes in the percentages. And now if this one drops down 1, so if it just drops down to this blue line, but we extend this blue line out to the halving, so we would expect to potentially go parabolic after the halving, but we'll be down here, that we won't be up here, most likely. And if we make it up to this line, let's say it's the same as the last 2 times. So, you know, this one was the end of or around 2013. This one, or sorry, this peak was the end of 2013. This peak was the end of 2017. So if the next peak occurs at the end of 2021 and it lands on that blue line, you know, it'll be approximately 141,000. But this 141,000 is taken from just this ratio here. This going up 724% from this the peak of this bull run to potentially the peak of this next bull run. So it's not entirely set in stone there, obviously. If you just go to the plot and look at the data at the very end of 2021, I think it has the price at around 160,000, not 141,000. So you know, it could potentially be around, you know, 150,000 potentially, but I anticipate a lot of people are going to start taking profits if it gets into 6 figures. So if we hit 100,000, I'm sure there's going to be a lot of profit taking at that point. Doesn't mean it can't go higher, but this, if we continue the same trend, would put us at 141. Now, if we do manage to do this, if we do manage to go up, like, you know, over the course of the next couple years, you know, we're not going to go up in a straight line. And in fact, if you go all the way back, we more or less are on the yellow line down here when the halving occurs. So when the halving occurred in 2012, you can see we were on the yellow line. In 2016, when the halving occurred, we were basically on the yellow line. In 2020, we're already on the yellow line now. So, I mean, we could just continue to ride up this yellow line, maybe get to around 12 or 13,000 by the halving, potentially. I don't know. I mean, plus or minus, you know, a few K, I imagine, but what's a few thousand among friends? If we continue to ride this line up, we might still be on this yellow line, and then we might even drop down. But ultimately, I think we will likely see some type of parabolic run-up. And if we do reach this 141,000 or thereabouts, you have to remember that it's not going to be sustained and that we will drop down. And the way I've calculated this number is the same way I calculated this one. So it's just taking the difference between these ratios, which is 0.348 from here to here. So if we do another 0.348 from here to here, that puts us at 924% from the depths of this bear market to potentially the depths of the next one. And that would put us at around 30 grand, which, you know, I think would be somewhat realistic because, I mean, you know, the peak over here was 1151, which was still lower than the bottom of 2 bear markets later. So not the first bear market, but the next bear market. So that means that this, if this is the ultimate, you know, capitulation area, it would still be, you know, higher than the peak of the previous 2 bull runs before, basically. So 1949 up to around 30 grand. from here to here.
So you have to admit, it does kind of make some sense, right? Now, obviously, we need to take any type of prediction with a grain of salt. Anything I say, anything anyone says. Reality is, nobody actually knows. We could have a black swan event. Something really bad could come out. Something really bullish could come out. We really don't know how Bitcoin could be affected by these sort of short-term bits of news or fundamental technical type things that could happen. But overall, I do think this is a relatively good blueprint. And yeah, let me know what you guys think. Do you think we could see a $141,000 Bitcoin by 2022? Let me know below. But, you know, so many people say, well, what's the strategy? How am I going to get there? You know, should I be trading? Should I be holding altcoins? Well, guys, what I told you yesterday, essentially, we went to DCABTC.com, which is $cost-average-bitcoin.com. And you can see even right here, according to Binance Research, when in doubt, HODL, not holding Bitcoin on December 7, 2017 means you would have missed its largest daily absolute gain of $3,608. And let's be honest, the average person is not a day trader. In fact, most day traders lose money, right? Swing trading, okay. But for the most part, the best and most simple solution for the average person is to just buy and hold, dollar cost average. Now, you could argue, well, what if I bought and hold from 20K all the way down? Yeah, that would suck, right? But also, if you had been buying all the way down at 7 and 6 and 5 and 4 and 3, and then all the way back up at 4, 5, 6, 7, and currently we're sitting, you know, around 8 point, I don't even know what we're at right now, 8.6 or something like that, you would still be up. And yes, even though small percentage would be lost, your overall portfolio would be up. And if you don't believe me, essentially, check out yesterday's video and you can go to DCABTC.com and you can try it out for yourself, right? And yeah, I mean, for example, you know, they say that time in the markets, okay, is better than trying to time the market. And that's one of the biggest problems that we have is trying to time. I'm going to get in at the ultimate top. I'm going to get in at the ultimate bottom. I'm going to make the absolute best trade. Most of us are never going to catch the bottom, never going to catch the top, right? And for example, had you been holding Bitcoin right here, you know, you would have basically been a part of this massive pump on October 25th, where basically from bottom to top was, you know, 41+% depending on which exchange you're looking at. So, okay, granted, how many people sold the top? How many people bought the bottom? Exactly. That's why those who just simply held, if you were just holding Bitcoin from, you know, even down to this dip to where we are right now, you'd be up 17.62%, which is the beauty of dollar cost averaging. Now, I know someone's going to say, well, I'd be down. Okay, guys, I know, okay, we're having some sideways consolidation, but the thing is sooner or later, we're going to break this and we're going to go above it, and then everyone's going to just look back at this and go, wow, I had 5+ months, 6 months of, you know, assuming we go to December, to accumulate this thing, and I just basically didn't. So that is the situation. Also, guys, if you have not checked out the Bitcoin slang song from Zutek, definitely check it out. Here's kind of like a little clip of it.
Hey, pay attention on how I break this Bitcoin slang down. Check it, a Bitcoin is a currency, blockchain is technology, transactions take place on it constantly. A public key is your address, private key is your access, cash is trash, but a Bitcoin is an asset.
All right, I don't know if I'm going to get some kind of copyright strike for playing that song, but I did leave it a like, so check that out. I will drop that below. Also, breaking leaked news. What is this? The Shanghai government has officially announced a war towards shitcoins and certain crypto-related activities. Please read my translation attached to this tweet for details. So much news coming out of China. What's fake? What's real? I have no idea. The president is pumping blockchain and cryptocurrency, and now apparently Shanghai government has officially announced a war on shitcoins. Let me know if this is true. I know somebody out there has got to be from that area. Let me know if this is fact or fiction. Very, very interesting. Also, if you guys are familiar with OneCoin, well, it looks like Konstantin Ignatiev, the brother of the missing crypto queen, has admitted to his role in the OneCoin fraud, including money laundering. They believe there was about $4 billion raised during this. And yeah, he's not been sentenced, but could be facing up to 70 years in prison for his role in the fraud. So definitely pretty crazy. This was a big one. Stay away from these Ponzi type things, guys. They are very, very dangerous, and you will lose your money.
You're gonna learn today. You're gonna learn today.
Also, we have the U.S. Department of Homeland Security has awarded nearly $200,000 to a blockchain startup, Digital Bazaar. By the way, this is actually a fact. This isn't potentially Chinese news that we can't back up. Essentially, the current process of issuing, validating, and verifying a number of licenses and certificates are often paper-based, very outdated, of course, would be much better on the blockchain. So this turns these processes basically digital. It enhances security, interoperability, and prevents forgery and counterfeiting. Great use for blockchain. We've talked about that. And also check this out at the Berkshire Hathaway New York offices. Somebody made some Bitcoin art out of, you guessed it, rat poison. So you remember when Warren Buffett said Bitcoin was rat poison squared? Well, now this is some sort of a protest or something. Also, this is a Bitcoin address. I don't know whose this is. I'll leave it there, though. I don't know if it works or not, but hey, if you want to donate to this artist, thank you for, being part of the movement there, buddy. You rock. And having a look before we go, how are backed volumes today doing? It's been a pretty wild day, so look at this now. They got them all the way out to February. 7, 10 for December, 18 for January, and 5 for February. So looks like it is growing. It is growing, and that is it for me today, guys. Thank you so much again for coming back to the channel. You guys rock. You're the reason that I do this every single day. Enjoy your weekend. Let's have a look. What are we doing? Yeah, we're kind of struggling around here. Like I said, it was a bounce. It wasn't the strongest bounce. And the thing is like, if we don't get above some of these levels, like even just getting above this wick at around the 8.5K level, it's not really looking good. So, like I said, by the time you are watching this, you'll probably have a better idea. I am still looking for maybe one more dump, possibly. I'm not trying to be a Bitcoin bear. I just think that Bitcoin has a tendency of kind of like kicking you when you're down. You know what I mean? Like, you know what I'm trying to say? Not in a bad way, but it dumps, and then it kind of just like dumps an extra 5% just to kind of rub it in your face, right? Before having that recovery. Might not do it this time. That could have been it. This could be the bottom, and anyone that got in, congratulations, but we will keep our eyes on it.